Hello, ladies and gentlemen. Good day and welcome to the show. I'm glad to have you guys here on this Thursday, the 11th of February, 2021. Thank you for tuning in. Let's get in there and let's start this. Well, just a second. Let me get my charts here. Okay, let's start the charts right here. First thing I want to talk about is in the world, there's two places that are very strategic. One is, see, if a war started with Iran, I don't really think that it would, the Russia or China would really, probably comes down to the crunch of it all. I don't think they would get involved that much, really, to tell you the honest truth. But there are two countries where Russia and China would get involved very quickly. And for China, it's Taiwan. And for Russia, it's the Ukraine, you know? And this, so I keep my eye open. I watch for this, any situation that would involve Taiwan or would involve Ukraine. And Russia does not want Ukraine to join as a NATO member. Honest to goodness, right? And so there's been this thing over the years, where Russia and China and Ukraine thinking about joining up and becoming a NATO member. It's mostly talk, so Russia's not too worried about it. Anyway, there's more talk about it here. NATO chief tells Ukraine that the door remains open for membership. This would make Russia very, very upset because it's so strategic. The Ukraine is so strategic in Russia's defense. I'll give you an example of how strategic it would be for Russia. It would be a very similar move for Ukraine to join NATO. It would be a very similar move to what happened in Cuba during the Cuban Missile Crisis, when they were stationing missiles in Cuba. Because the Ukraine is so close strategically to Moscow. I mean, it's they do not want that's the last thing Russia would want, is for the Ukraine to join up as a NATO member. So keeping our eye on that situation. Another thing I want to talk about today is the markets. Let's go over and take a look at them today. 27.16 for silver. It's up 15 cents. And again, it's found a new range. Its new range is from 20. Let's see. It's in the middle of its new range anyway, at 27.13. Now, as far as cryptocurrencies is concerned, I'm watching very carefully. Well, no, we forgot to do gold. Sorry, let's do gold. Take a look and see what gold's doing. Gold's down $5.40 today, where silver's not. Every time that happens, you're seeing a slight movement in the gold to silver ratio. And silver's growing a little bit stronger. That's going to continue, guys. That movement in the gold to silver ratio, until it comes back and it normalizes. And the reason why it's not normal, the gold to silver ratio, is because of the manipulation of the price of gold and silver. It went on for years, A normal range for probably is 40 to 1. Is a very normal range for silver to gold ratio, but it can go down as low as, like, easily go down to low, like 15 to 1. Or even 10 to 1 it can go to, And there's been talk of people out there realizing how the world is getting stripped of silver more and more and more, while gold, they keep storing it in vaults, more and more of it. So in the end, you're going to have a lot more gold out there than you are silver at the end result, because they use up all the silver in industry and stuff like that. Be amazed how much and they're using more of it every year. They're using it. They don't use the gold. They just store it away in vaults. And so in the end, you're going to have more gold around than you are silver. And so why should the gold price be so much higher than silver? Well, it won't. Ratio will come down, and it really, honestly, it could come down to 10 to 1. 10 ounces of silver for 1 ounce of gold. It could go that far. But we might be looking out a few years. I'm figuring for a 10-to-1 ratio, we'd probably be looking at about 5 years from now, or maybe 10 years from now. And I think it will get there ultimately. But, I'm going to tell you something. If you're looking out in the future, 5, 10 years in the future, what's the gold price going to be? Think about that. It's not going to be 1838 like it is today. I can tell you that much right now. So anyway, we're going to move into cryptocurrencies. Talk about cryptocurrencies a bit. I'm going to tell you what. I'm watching that Bitcoin ratio, Bitcoin dominance ratio. When it drops under 60, it's at 61.6% right now. When the Bitcoin dominance ratio drops under 60, it could drop as low as 50. That means that there's a high degree of confidence when you see that ratio drop. And that means we're in the meat part of the rally. This rally in cryptocurrencies, the meat that we're in the right into the bread and potatoes of it. We're right into the solid part of it when that ratio drops down, and it could drop down as low as 50, and that's when you're really going to see those altcoins perform. Then what happens is when we get toward the end of this rally, you'll see it start to move back. You'll see the Bitcoin dominance ratio increase again and go higher. That's when you're going to get your drawback in the cryptos. That's when you're going to get your because then what's happening is people are getting a little bit nervous, starting to sell off some of their altcoins and go back into Bitcoin as a safe haven asset. That's when you're drawing the close to the rally. And we are going to get a drawback on this. We are going to get a correction on this. It's coming, but I don't think we're there yet. And I think that the signal for that correction is in the Bitcoin dominance. So it could drop down as low as 50, and then when it start to see it rise back up, that's when you really got to watch out, because that's when the correction could be coming. And Bitcoin is notable for its very large corrections, or even crashes, or bubble bursts. It's noted for that, but this time I'm thinking that we're not going to get a huge bubble burst like we did the last time when it went up to 20,000 and come all the way down. I think it was under 3,000. I don't think we're going to get a big correction like that. I don't think the air is going to come out of it that bad. The only way the air will come out of it that bad and we'll get that big of a correction is if we get some sort of a huge stock market crash or something like that, which now is looking a little bit more unlikely as the days progress. We were coming through a period there over the last couple months where a stock market crash was in the cards, but it hasn't materialized. Why it hasn't materialized is because of the accommodation of the Fed. Simply why. The Fed has been too accommodative, and there's been too much easy money coming, and also there's talk of more easy money coming, and this is just too much for markets. It keeps them buoyed. Dow Jones today, we're looking at it 31,477. It's up 39 points on the day. Not so much energy in it like it was. Now, it's a little bit toppy. The Dow is a little bit more toppy than it was, but it's still advancing upwards. Take a look at crude oil, 58.53. It's down 15 cents on the day. Move index today. This is our window into the credit markets. 46.27 today on the move index. If this goes up, the credit markets are getting unstable. And so we see stability in the credit markets. The fact that this move index is going along sideways. Bonds and rates today. What we're looking at is 1.14 on the 10-year and 1.92 on the 30-year. I want to tell you something about this. As the inflation starts to come in, big time, probably this fall, these bonds are going to start to sell off, and we're going to see the bond yield start to rise. as people move into assets that are out of the dollar. See, the bonds are not out of the dollar. You're in the dollar with these bonds. And this is a dollar trade. They're in there tight with these bonds right yet. But when they realize that it's definitely going to be inflation, you're going to see bond yields start to rise. And the Fed's going to have to do yield curve control on the long end of the yield curve. That's what I'm waiting for. I'm waiting for that yield curve control. That's going to be when your gold's really going to move. It's going to put a fire under gold. It's going to put a fire under silver. And you're going to see them really go when we get yield curve control. And it's coming. I can see it coming. You know, they can't do too much more stimulus and stuff. And the economy starts to pick up a little bit later, you know, this summer. We're going to see yield curve control. That's really going to drive the alternatives to the dollar. Really. So now let's take a look at U.S. dollar index today. 90.34 in the U.S. dollar index. And the dollar's falling again, starting to fall. That's your window into the markets for today. Listen, guys, have a great rest of the day. Give me a thumbs up on here and ring that notification bell and subscribe, you know, and get a few of your friends to subscribe. I'm awful close to, I got a few more subscribers. I've got about 30 or 40 new ones just recently. It was like minus 89 or something. Now it's like minus 30 something, you know. And get that minus away and get it into a plus again so my channel's in the green. It's actually starting to grow again. It would be a good thing. It's been a long time. Thank you for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.